Hello everyone and welcome to TTT Markets. I am Fotis and today we are going to discuss how to trade Forex with the market profile. We have received so many requests to do a video that we discuss how to trade Forex, the euro, the yen and so on, but without using the traditional indicators you find inside MetaTrader or TradingView. Is it possible to trade this with market profile? Yes, you can. And you can have very good results. You can be consistently profitable. So without any other delay, allow me to move on. And let me show you a chart like this. Why am I beginning with this chart? Because I wish to show you that it is not always easy to trade using technical indicators. It is not always easy trying to put together some rules using technical analysis, and there are certainly some limitations. For example, here we do have the dollar yen, I think it is the 30-minute chart. We have some moving averages, pivot levels, weekly levels, we have monthly levels, pivots. Let me zoom out, the Bollinger Bands, some MACD RSI, the moving averages, and round numbers. We do have some indicators there. So, what is the signal? How do we generate the signal? What do I mean by this? As you can see, we have 4 or 5 different indicators. How can we synthesize all of them to generate a buy or sell signal for us? Do you buy here, but it is touching the Bollinger Band? Shouldn't it move lower? Where are we doing business? Shall we buy at support? Shall we buy the breakout? Are we going to buy with the breakout of the high? Shall we wait for the MACD to move positive? And how can we combine all these different indicators? You might say, well, this is the 30-minute, it is supposed to be more noisy and so on, to have more choppiness. Then let's look at Euro Swissy, and this time I'm just using a normal MACD and I'm going to use some moving averages, and this is the daily chart. So I'm using Euro Swissy because it is supposed to be a low volatility currency pair. And again, it is not always very clear where are we going to do business. Are we going to buy the breakout? Are we going to wait here when the fast MA is breaking above the slower MA? You can see again the difficulty that you cannot have 100% mechanical rules. And this is the problem. As soon as the strategy you are using, the technical strategy, becomes discretionary, it is not, you cannot use 100% clear rules, then you have a problem. This is why investors came up, or it is better to say traders in the 70s came up with the market profile. And let me show you, this is the market profile on MetaTrader. It looks a little bit weird if you haven't seen it before, but allow me to explain. Do you remember from high school or college the normal distribution? What does it say? Well, the normal distribution says that if we have a perfect distribution, what is a distribution? It is if we study a series of numbers, different numbers, for example, the weight of the class, or the height, or the age of the population. If we study a population that has some unique attributes, okay? If we study a set of numbers that we measure them in some way, the big numbers, odd numbers, even numbers, the weight, the height of someone, and so on. I think you get the idea. So if we study this range of numbers and the distribution is perfect, we are going to see some very specific statistical properties. If this is the mean, so that means this is the mean value, the average value. Usually, again, if the distribution is perfect, the range of numbers will be 68% of the time between the minus to +1 standard deviation away from the mean value. So 68% of the time, in simple English, the numbers are going to be in this area, inside this area. About 96% of the time, they are going to be minus plus 2 standard deviations away from the mean. And 99% between the minus 3 standard deviations and the plus 3 standard deviations away from the mean. So the distribution is telling us where the observation is going to be, in which area, if the distribution is normal. So now let me show you again how the profile looks like. So this is the profile. Do you see now why it looks like this? Why traders made it in such a way that it looks like a distribution? Because you can see better the behavior of price, but most importantly, you will achieve something that is even better. What is that? That you stop trying to forecast price action. You stop trying to interpret the candlestick, the moving averages, the MACDs. You stop trying to think what the price action is telling you. So no randomness. Instead, you are focusing on structure. There are some very specific rules which I'm going to share with you, and this is what makes the market profile unique. So let me zoom in a little bit and do this. So you can see that inside the profile we have letters, and each letter is a period. Usually it is 30 minutes or 1 hour. Here we have 30 minutes, so every letter is 30 minutes. So every time the price goes to a certain point, it prints a letter, and it is moving vertically, not horizontally like the traditional bar charts or candlestick charts. Why is this important? Because then we can see the distribution of numbers. We can see, this is the euro, but in this level, 115.80, this is where we have the highest range. This is where we have the highest concentration of observations, 115.80. What do you think will happen if price moves above? Do you see where I'm getting with that? You will also notice this blue horizontal line. This shows us the value area. So what is the value area? The value area is where 70% of the volume takes place. So inside this area between 115.90, I think, if I can see well, to 115.70, this is where 70% of the volume is taking place. By the way, each profile here is a daily chart, and you can look at this with the traditional way, using the TPOs, using the numbers, or you can click here histogram, and you can look at it as a histogram, and you can see again the distribution of volumes. You can see, for example, that this is the value area between these levels. This is the value area high, and this is the value area low, and the price is basically oscillating inside this area, up and down inside this area. Why is this important? Because automatically you do not think of what is going to happen next. I don't know, this is random. I have no idea what euro is going to do next. Instead, I'm asking myself, where am I doing business? Where do I go long and where do I go short? You don't go long down here. Sorry, you don't go short down here. You don't wait at the bottom of a range to go short. Why? Because the buyers have an advantage to do business at the bottom, and the sellers have an advantage to do business at the highs. So as long as the range looks normally distributed, then we sell the highs and buy the lows. There are, of course, days, let me show you again through the traditional TPOs, when we have an extension of a range. How are we going to know about this? How do we know that we are about to get an expansion of a range and the price can move significantly higher or significantly lower. How do we know this? What we can do is we can merge a couple of profiles so it looks a little bit more like a distribution. So I click histogram because it's easier. Please remember that this is a daily and I am looking for areas that the price has more or less moved horizontally. So I see that in this area right here we have a range. Now what I do, I click there and to this profile and I merge to the left. And what do we have here? Then we have 4 or 5 days merged together that look much more like a normal distribution. So the price is rotating inside this area. So one day comes and what is the price doing? It consolidates outside the value area high. Do you see this? It consolidates outside the value area high and then it attempts to break higher. So again here I am not trying to guess what price action is going to be like. So I buy there the breakout with a stop below. And look what happens. Can you see the reward risk? I am not trying to forecast what will the euro do next. The only question that I'm asking myself is where am I doing business? Next we have this move and the next day we have another distribution that looks like this and the price drops below. Let me zoom out, sorry, so you can see better. So where am I doing business? It breaks out, it comes back up, resistance. It helps me to identify a resistance level in a very nice way. Because something that I didn't mention so far is you need to understand the structure. You need to understand how the price is moving. The price is not moving from one high to the next low and then again to the next high in a vertical way. We have periods of consolidation, we have periods of sideways movement, we might have choppiness, we might have a sudden expansion of volatility. So it is important to understand the structure and who is in control. This is why the market profile is very useful, because this is the characteristic of price. It moves up to a certain level, up or down, stops, consolidates, and then either reverses or it continues. And we can understand this better with the profile. Let me again zoom out so you can see a little bit of history, what has happened in the past. So you can see here how this is helping us. As I told you, I'm identifying levels like this, I merge, and I see we had the breakout to the low, it comes back up, and look where it stops, point of control. So do you see that the levels that the price stop, they are not random at all. This is the area with the highest volume, and this is where we have this spike. This is it. This is exactly at this level, and then it continues lower. So you know exactly where to do business. Or look at this expansion to the lows. We do this, we merge. The idea is to make the distribution look as normal as possible. And now what do you have? The price rotates up and down, it comes back up, consolidates, doesn't print a new high. Actually, let me get rid of the grid so you can see better. Yes. So it doesn't print a new high and it moves back inside value. As soon as it moves back inside value, this is a signal to sell. It means that it is very likely that the price will move back to the bottom of value. And this is exactly what happens. So we sell there, stop above, so we risk like 30 pips and the price is giving us almost 60 pips in one day. That's about a 2-to-1. So we are going to do the same now. So what I will do is I will click there, I'm going to merge. Well, I'm not going to merge this because it will not look so normal then, but I will merge these three. So what do I see now? Where am I doing business? Again, this is the euro. Well, what I notice is that just above the point of control of this profile, we have the buyers stepping in. So does this mean that we have to buy the euro? I would be more interested to buy the euro if it breaks above the value area high, which is this level, just above 150, 90s, 95. So this is the level that I'm watching carefully. If it moves above and it is accepted and the buyers are accepting the offers, it is very likely that it will test again these highs over here, this value area high. So this is how we approach this. And I can tell you that it works with high volatility pairs as well. This is the pound yen. Let me click histogram because it's easier, and I'm going to remove the grid. So let me zoom out. Allow me to sort out the chart a little bit so you can see better. There you go. Again, the logic is the same. The logic is the same, it doesn't change. I'm going to merge this. Now from experience, I know which ones to choose. Again, the secret is to choose profiles that will make the whole profile look as normal as possible. And again, where are we doing business? Let me again zoom out a little bit. Okay, here we have single prints. This is terminology that we use in market profile. So this is a huge level, 205.30s, 0.40s. This is an extremely important area. You don't have to be a magician though and try to guess where the peak is going to be. You can relax, and what you can do is you can zoom out a little bit and say, right, this is the distribution. Let me merge these profiles. It doesn't look normal yet. At the moment we have an expansion of the range. We have to wait until it consolidates at the highs a little bit. But if it moves back, this is what we can say with more certainty. If it moves back below 204.50, then it opens the road for lower areas. So here automatically the market profile is showing us where to do business. It also gives us information about the structure. So it tells us that right now, if you wish to sell, this might not be a good idea. Why? Because we have an expansion of a range. It doesn't look normal. It seems that the buyers are in control. So wait until the market becomes a little bit more balanced. And you can apply market profile in FX, in lower volatility pairs like the Euro USD, but it's also the best. Let me show you again. Let me go back to the Euro. Because it carries the highest volumes. You can also use it in pound yen, which is a currency pair that has much greater volatility. You can do it in indices, in commodities, in gold, and so on. The principle remains the same. I hope this helped you clarify a few things about market profile, and it is a great tool to use in forex trading as well, because for two reasons. Number one, it leads to great reward-risk ratios, and secondly, maybe more importantly, it helps you to trade the structure and not price action. Thank you for watching. I will see you in the next video here at TTT Markets.